But let's focus on Capital First as well. It's been a strong quarter in terms of performance from Capital First. Let's go through the key numbers first. The NII, that's up almost 49% at around 415 crores. The GNPAs and net NPAs have also been absolutely stable. So the GNPA is 1.72% compared to 1.71. The net NPA is a little over 1.1%. It's at 1.04, and capital adequacy is close to 19 odd percent. So seems to be a stable quarter. The provisions have gone up by around 42 odd percent, and fee income has also gone up 46%. We have the management with us. Mr. Vaidyanathan joins in now. Mr. Vaidyanathan, always a pleasure to speak with you. Thank you so much for joining in. Your asset quality seems to be stable this time, and a robust growth in net interest income as well. So take us through the broader highlights of this quarter, and on a 90-day reporting period, on days past due. Are you mostly stable? I mean, will the asset quality remain at these levels in going into the second half as well?
First of all, I think for the last 4 years, the RBI had moved the reporting norms for NPA from 180 days past due to 150 days past due to 120 days past due last year, and now 90 days past due. I'm actually very happy that that activity is over and done with, and then now banks and NBFCs are at even platform as far as reporting of NPA is concerned. Now, on that norm of 90 DPD, 1 year back we were 1.72%. We're still 1.72%. As far as the net NPA is concerned, we are at 1.04%, which was 1.13% last year. So it's quite stable. Now, looking ahead, absolutely no problem at all. I think we've seen all sorts of changes coming last year. We saw demonetization, we saw GST. Asset quality is holding up quite well, and I don't see any change on that count happening in the future also, at least not in the year, 2 years.
All right, Mr. Vaidyanathan, then let's speak about the different segments. Where has the growth exactly come from this time around? And if you can tell us how your deepening focus on the cross-sell portfolio is going on of personal loans, which is included in consumer durables as well as two-wheelers. Then we'll go into the other segments as well.
It's very simple actually. Basically, there are many segments. As you know, we're running a large business, so some businesses go up and some businesses come down. To give a sense, for example, the wholesale financing book is down about 30% over the last year. The loan against property business, the growth has slowed down. It used to be higher earlier, now it's about 10%. But on the other hand, the housing finance business, affordable housing finance business has actually grown by over 100% over the last year. The durable financing and the two-wheeler financing are all behaving very stable and probably growing in the 30s. So blend, I think about 25% is the growth we have done. Now 25% is, we believe, sustainable even the next year as well.
Right. Can you take us through your borrowing profile? Bank borrowing is 72%. I mean, we've just had the RBI cut rates by 25 basis points yesterday. So what do you think the borrowing profile could look like from here on? Are you planning to reduce reliance on bank borrowings? Any securitization plans or not? And also, if you believe that the CP market is flush with funds, so are you tapping the wholesale end as well? Are you finding cheaper avenues there?
Our broad approach as far as the borrowing is concerned is that we find that the cost of funds of borrowing from the mutual funds and provident funds is actually cheaper than banks. So we are migrating ourselves in that direction. Borrowing from banks actually in 2016 used to be 58%. In 2017 has come down to 38%. So you can clearly see that the share of bank borrowing for us has come down quite sharply. And like I said, the other components have actually gone up. The other thing that's happening is that yes, the CP rates are really very low, as you can see, but we keep it restricted to an amount depending on asset liability strategies of the company.
Right. So, Mr. Vaidyanathan, can you take us through what the provisioning number this time has been? I think it's 140 crores versus 99 crores. So do you see increased requirement of provisioning from here on? Have we plateaued out?
Well, it is basically depend on the growth of the book. As the book will grow, we will need to keep taking additional provisions to be rather safe and conservative. But this quarter particularly, there was a requirement from the Reserve Bank of India that standard asset provisioning has to go up from 0.35% to 0.4%. So that 5 basis points on the portfolio that we had of 20,000 crore, on book portfolio of even lesser than that, we got a book of, we took an expense of 8 crores to provisioning line. So to that extent, this provision number is overstated by 8 crores. In fact, but for this number, then net profit would have been about 73 crores this quarter.
Right. And finally, before we let you go, if you can take us through how the lending mix is likely to look like, because the high-yielding two-wheeler, consumer durables and MSME is also there where the focus is. But what do you think about the MSME loan against property business? How much of that will constitute the lending profile going ahead into the future as a target, given the kind of huge push that we are seeing to low-income, middle-income housing?
You see, the way we look at it, we're not exactly anchoring ourselves to saying it has to be durables or two-wheelers, anything like that. The way we look at it, we say the whole market is a very large market. We like the loan against property market. We like the affordable housing. We like the two-wheelers. We like durables. We like small entrepreneurs financing, the kirana shops and the chemists and so on. They are fantastic businesses and very heavily underpenetrated. So the way we look at it at a macro level, we think that, okay, wholesale financing is very black swanish. We want to reduce that. We want to build a retail, and that story is where we're focusing on. And just with this strategy, I think certainly we can grow by 25% next year. We believe profits will outpace the growth of the top line of loan book of 25% because of operating leverage. So the way we look at it, this is a large space, and we're never going to run out of growth.
All right, Mr. Vaidyanathan, we're going to leave it at that, but pleasure speaking with you as always, and thank you so much for sparing the time for being with us, giving us an outlook of future growth trajectory as well. That's all the time that we have on this edition of Trending Today. Thank you so much for watching.